Chip stocks are having a moment, and I mean a real moment. KLAC just jumped nearly 10% in a single day, and it's not alone. The semiconductor sector is showing serious life right now. So what's driving this rally, and is it something you should be paying attention to? Let's find out what it means for you. Let's start with the indices. All right, so the Nasdaq had a solid day today, up 0.86%, closing at 25,929. Now, here's the thing, that's actually a pretty nice movement when you're already at this level. But zoom out to the week, and we're looking at a 4.27% decline. So today felt like a bounce back, right? The big story here is semiconductors. Chip equipment makers and chip designers are leading the charge. There's some momentum behind AI infrastructure spending that just feels real right now. That said, we're still down for the week, so investors are definitely taking the wins where the Dow had a tougher day, down 0.16%, sitting at 50,786. Now that's not a crash or anything, but it's interesting because it's moving in a different direction than the Nasdaq. The Dow is more exposed to financials, industrials, and energy, and those aren't getting the same juice that semiconductors are. On the week, the Dow is down just 0.57%, so it's actually holding up better than the tech-heavy Nasdaq. This is a classic rotation story, money flowing out of traditional sectors and into the AI trade. Not necessarily a red flag, but definitely a signal that investors are being selective right now. Now here are the top movers of the day. KLAC is the story of the day, up 9.27%, closing at 2,108.06. That's a monster move. And here's the wild part. It's up 8.66% just this week. This is the hottest semiconductor equipment stock right now. Why? AI infrastructure build-out is accelerating. Data centers need more chips, which means chip manufacturers need more equipment. Analysts are seeing sustained demand, and KLAC is riding that wave hard. This isn't a one-day fluke either. There's real momentum behind this. LRCX is right on KLAC's heels, up 6.98% today at 324.45. This one's up 2.31% on the week. Another semiconductor equipment play, and it's benefiting from the exact same tailwind. Chip manufacturers are ordering equipment to build the capacity they need for AI chips. Lam Research is one of the best-positioned companies in that supply chain. The move today is smaller than KLAC's, but that's probably just stock-specific momentum. Both of these names are catching the same wave. AMD is up 4.59% today, trading at 490.33. But here's the mixed part. It's down 3.88% on the week. So today was a nice pop, but we're still in a losing week overall. AMD is a chip designer, not an equipment maker, so it's got a different set of catalysts. The AI opportunity is huge for them, but there's also competition from NVIDIA that's intense. Today's move feels like some short covering maybe, or just catching up to the equipment makers. Either way, the weekly decline reminds you that investors still have some concerns about AMD's long-term positioning. Tesla is up 4.59% today at 408.95. That's a solid day. But on the week, it's down 1.67%. So again, we've got this pattern where today is a bounce, but the week is still underwater. Tesla's move today is probably just mean reversion. The stock sold off earlier in the week, and now it's bouncing back. There's no huge news today pushing Tesla specifically. It's just part of the broader risk-on move we're seeing in growth and tech stocks. Keep an eye on delivery numbers and Elon's latest tweets for the real catalysts. Regeneron is the outlier, down 3.79% today at 611.34. But here's the silver lining. It's up 1.78% on the week. So this is a stock that had a good week but got hit today. Biotech is always kind of its own thing, right? It's driven by clinical trials, FDA decisions, and deal news rather than just the broad market mood. Regeneron might be facing some profit-taking after the weekly gains, or maybe there was some specific news we're not seeing in the market move. Either way, it's the only big mover that's red today. Worth watching to see if this is a trend for biotech or just Regeneron. Now let us look at energy and fuel. Oil slipped a tiny bit today, WTI crude down 0.15%, sitting at 90.40 a barrel. Not a big move, honestly. But the weekly picture is more interesting, down 1.91% over the past 5 days. We're seeing some softness in demand expectations. And honestly, the geopolitical situation isn't as white-hot as it was earlier in the year. OPEC is still managing production, but there's no crisis pushing prices higher. Supply feels stable. So for now, oil is just kind of treading water. Natural gas took a real hit today, down 2.48%. That's meaningful, sitting at 3.150 right now. Over the week, we're down almost 1%, which is less dramatic but still pointing in the same direction. Here's what's happening. We're moving into June, which means summer cooling demand is ramping up, but it's not summer yet. Storage levels are healthy, and there's not a ton of supply pressure. So traders are kind of pumping the brakes. This is seasonal stuff, mostly. Keep an eye on the weather forecast for the Southwest. If we get a heat wave, nat gas could spike. For now, though, it's just consolidating. Moving on to metals. Gold is doing what gold does when people get nervous about the economy. Up 0.55% today, now at 4,360.90. That's a steady climb. But on the week, it's down 2.55%. So we had some selling earlier in the week, and today was a rebound. What's interesting here is that the Fed is probably not cutting rates anytime soon. That hot jobs report came out and basically pushed rate cuts further down the road. Normally, that would be bad for gold, right? But people are also worried about inflation and economic stability. So gold's mixed signals make sense. It's a classic hedge trade. Silver had a much rougher week than gold. Down 1.54% today, down 9.51% for the week. Ouch, that's a big divergence. Here's the thing about silver, it's industrial demand plus safe haven demand. And right now, the industrial side is getting hammered. People are worried about manufacturing, construction, and economic slowdown. So silver's selling off way harder than gold. It's a canary in the coal mine for the real economy. If manufacturing picks up and these supply chains stabilize, silver could bounce back hard. But for now, it's the weak link in the precious metals complex. And finally, let us look at tomorrow. All right, so here's what you're seeing. Semiconductors and AI infrastructure are stealing the show right now, but that's coming at the expense of other sectors. The Dow's holding steadier than the Nasdaq, which tells you that traditional names are being overlooked. Tomorrow, we don't have any major economic data or earnings, so look for this momentum to either continue or consolidate. The Fed is definitely staying tight. That jobs report made it clear rate cuts are on hold. That's actually supporting chip stocks because it means companies are staying disciplined with CapEx, which is good for semiconductor demand long-term. Keep watching for any AI trade momentum. This could be the beginning of a real shift in the market. The next move could be significant, so stay sharp. For your daily market update video, don't forget to hit that subscribe button and turn on the notification.